10 simple money management tips. Do not forget to like, share, subscribe and ring the bell for more videos. Start moving towards financial security for your family with 10 simple money management tips. Knowing you have enough money to pay for what you want today and in the future is one way to feel financially secure. It's also one of the reasons many of us save, invest and insure our assets. Here are 10 simple money management tips that can help you and your family feel more financially secure. 1. Create a comprehensive budget. Write down how much money you receive from your salary, bonuses, benefits, reimbursements and other sources. Compare that to all of your expenses to ensure you have enough money to cover everything you need. 2. Spend less by trimming day-to-day costs. Identify areas to save, such as on your cell phone and cable television plan, or by planning meals and groceries to avoid takeout lunches and last-minute ordering in. 3. Eliminate unnecessary costs. Make a list of your current bills and their due dates, and pay your bills on time to avoid late fees and penalty charges. 4. Find ways to pay less interest on your debts. Focus on paying off debts with the highest interest rate first. Keep up with required payments, such as monthly minimums, on all your debts. Consolidate your debts into an all-in-one type of bank account or a secure line of credit, so you can make a single payment each month. Talk to a debt counselor. You may have free access through your employer's Employee and Family Assistance Program, EFAP. 5. Set clear goals to help accelerate your savings. Write down all the things you're saving for, then work out how much you need to set aside each month to reach your goals in the time frame you want. Then pay yourself this amount each month, as if it is another bill. 6. Don't pay more tax than you need to. Find out what tax bracket you and your spouse are in, and submit claims like child care costs, medical expenses and charitable donations, with the tax return for whoever is taxed at a higher rate. 7. Use online banking to set up payment reminders. Schedule future bill payments. Review your spending. 8. Make the most of workplace plans. Take full advantage of group retirement plans, including matching programs, and reduce taxes and out-of-pocket expenses with flexible spending accounts and health benefits. 9. Save for retirement now, regardless of your age. Plan to save enough to top up guaranteed government sources, such as the Canada Pension Plan, CPP. 10. Work with an advisor. Reduce financial stress and start to feel financially secure. Get help setting goals. Develop a customized financial plan. Prepare strategically for life's financial milestones. That last tip may be the most important. People who feel financially secure are over 5 times more likely to be working with an advisor than those who say they are struggling with their money, according to Ipsos Reid's 2015 study on health and wealth, 12-page PDF. Furthermore, households working with an advisor have about 2 times more financial assets than households that forego advice. If you don't have an advisor, we can help you find one. 4 ways to declutter your finances to be prepared for the future. Set yourself and your family up for financial health. Many households in Canada today have a little secret that can wreak havoc with their financial lives. Financial clutter. It's not the kind you find in closets, under beds or at the office. And we're not talking just about misplaced banking, tax, investment, insurance or credit card information. According to Manlife's 2015 financial wellness study, wanting to be financially prepared for a comfortable retirement is a common goal for Canadians, yet only 28% feel like they are. If you're unsure whether or not you need to do some decluttering, or if you're not sure where to start, here are 4 simple ways to get on the right track. Create a budget if you don't already have one and stick to it. Budgeting can help guide you toward good decisions when it comes to saving, spending and investing. The challenge is balancing your budget. Figure out how to spend less than you make to avoid unnecessary debt. Manage your debt. Reducing debt doesn't require an intricate strategy. Following simple rules like spending less than you earn is the key to making sure debt doesn't increase. As well, you will need to pay off more than the minimum payment required regularly if you want to reduce your debt. Plan for retirement. Whether you're close to retirement age or just starting out, you'll need to learn about potential sources of retirement income, understand the financial challenges in retirement, and determine your expenses in retirement. Prepare a will for yourself. Every adult should have a will, regardless of age. A will is usually quick and easy to create with the help of legal and financial advice. It's also one of the best ways to organize your affairs to preserve your wealth and plan for the transfer of your remaining assets. The freedom of flexibility. Looking for something a little out of the ordinary for your mortgage? Manlife Bank might have just what you're after. Flexibility and freedom may not be the first things that come to mind when thinking about a mortgage. But with MenLife One you can really manage it the way that works best for you. Andy Kuiper, Product Director, Retail Lending at MenLife Bank, breaks down the benefits of MenLife One and helps put you one step closer to your goals. Play the long game. Repaying your mortgage quickly may seem like the best approach when it comes to financial health, but that's not always for everyone, especially if it's not aligned to your near-term goals. We are realizing, especially with the younger generation, that lifestyle and living better are becoming more important to people than paying down debt as fast as possible, says Kuiper. Instead, what you may need is a mortgage product that adapts to you and your needs, now and in the future. You can accelerate your debt repayment if this is a primary goal. Or if it's not, you could still combine all of your emergency savings and debts under the one account. You have the freedom to draw down as you require additional money for things like a new car, vacation, RRSP loan, children's education, etc. In this scenario, you may not be accelerating your debt repayment, but you are enjoying life and potentially increasing your net worth in other areas: investment, property appreciation through renovations. Big differences, big rewards. It's hard to choose from the sea of sameness, but MenLife One stands apart primarily because, well, it's not really a mortgage. In its simplest form, it's a bank account that allows you to consolidate all of your bank debt and assets to save you interest costs and bank fees, versus the traditional banking method of having a separate account for each purpose, says Kuiper. But the biggest advantage is its flexibility. As more people begin to identify living better as a key priority, they will look for flexible banking products like MenLife One to help them achieve their life goals. A perfect match. The key thing MenLife One requires for success is discipline and planning. People who have not been managing their debt well or who are already living close to their means may be better suited to an amortizing mortgage, such as MenLife Bank Select, or a MenLife One that has a sizable amount in a fixed-rate sub-account, says Kuiper. But if you have a handle on your finances, it's truly suited for every life stage. The new homeowner has the benefit of accelerated debt repayment, with the flexibility to draw down for home renovations or to meet short-term income gaps due to starting a new family, explains Kuiper. People in their second or third homes who have older children may have greater equity in their home sitting dormant. This product allows them to activate their real estate to finance large purchases, or to purchase a second home cottage, or to help their kids go to school and start their journey to becoming homeowners. People approaching or in retirement can use MenLife One as part of their retirement planning. In many cases, drawing on your real estate holdings in retirement as part of an overall plan can yield certain tax advantages and allow one to stretch out retirement savings longer. 5 ways to get rid of debt. 5 strategies for eliminating personal debt so you can do the things that are truly important to you. Canadians owe $1.65 for every dollar of disposable income in our pockets. We're spending more than we're making. And it can increase our stress if it prevents us from paying bills, putting food on the table, or saving for the future. Here are 5 strategies for getting rid of debt faster, so you can put your money toward more important things. Make a budget and stick with it. To keep debt from ballooning further, put the brakes on non-essential spending. Knowing what you need to spend every month will help you make responsible spending decisions. Start with highest interest rate debt. List all your debts, credit cards and loans for school, car, bank, personal, etc. for a big picture view of your situation. Pay at least the minimum on all your debts by their due date, with extra money going into the highest interest debt, usually a credit card. This gets you in the clear faster and saves money overall. Some financial experts suggest paying off the lowest balance loans first. The satisfaction of crossing them off your list can motivate you to stick with the plan. You'll need to determine what approach works best for you. Consolidate debts. If you have a good credit rating, consolidate your debts at a bank or get a line of credit. This pays off all your loans immediately and leaves you with just one monthly payment, usually at a lower interest rate. It also simplifies your situation, which could help reduce your stress. Find ways to earn extra money. If feasible, consider getting an additional job until your debts are under control or eliminated. Selling an asset you don't need is another option for finding more dollars to help pay down debt. Talk to your creditors. Some debtors are flexible and will give you more time to pay or reduce their interest rate. In some cases, your credit card company may even transfer your debt to a lower interest card. Explain the situation honestly to see what options are available to you. Eliminating debt takes discipline, planning and time, but it can potentially happen faster than you think once you understand what you're spending. Create a plan to address it and put the plan into action.